Thank you for subscribing. Sasol owns 50% of Lake Charles Chemicals Complex in the United States, and the market capitalization is the worth of the company according to the market, and is calculated by taking the issued shares and multiplied by the share price. OPEC includes the United Arab Emirates, Saudi Arabia, Nigeria, and other oil-producing countries. The share price of a company is influenced by the number of buyers and sellers, obviously, and also by the in the long run, by the intrinsic value of the company, which is hard to determine. Headline earnings per share are important to know because they tell you whether the business is making money on its actual activities rather than the extra activities that it makes on the side. So for the dividend chasers, you can see that Sasol has a very attractive dividend history, and it's notable for such. A company can use debt to make much more money, and also a company can take the investors' money to pay debt. So it's important to know. If the net asset value is more than the company's share price, the company is undervalued. If the net asset value is less than the company's share price, the company is overvalued. But obvious, not all the time.
Thank you for that picture. I think it's very important to maybe then speak about the balance sheet at this time, because of course you've mentioned the issue of cash there, and of course making sure that your operations to date are as efficient as possible. That feeds into that balance sheet. But there's also quite a bit of debt sitting on that balance sheet. Let's talk about that. And even, as we see financial institutions, financiers, Simon, speaking about, moving away from funding projects that have to do with coal, for instance. What are we anticipating the negotiations will be for that to keep the cost of capital at a place that is reasonable for Sasol?
Yeah, thanks. I mean, the balance sheet is our primary focus area as well, and it's due to what you just said now, that we've seen some financiers, especially from Europe, where they're reluctant to fund a coal business. However, I mean, there's still funding streams available in the US and in Japan. You can still fund your business. However, we need to reduce our balance sheet, but it's not going to become a cash balance sheet. I mean, my vision is that Sasol will still has debt carrying capacity. If we continue with the fixing of our international businesses, it will have debt carrying capacity. So you'll have some debt that you'll have there. If you then build the transformed business or a sustainable energy business and chemical business in Southern Africa, that will also have debt carrying capacity. However, for the coal business, we need to reduce the debt on that balance sheet. So our
we talked about headwinds upon headwinds about a few companies in the show today. We mentioned their likes of the MTNs, likes of Braids. But Sasol is really one of those companies. It's been struggling. And we know why. I mean, they had quite a bit of debt bar. They've really struggled with the Lake Charles investment, and that seemed to be under control now. There might be some interest in that regard. we've seen the oil price and kick up a little bit. We know that oil price was still very recent, trading at the $60 levels, and that's not good because Sasol, I mean, let's call it, they break even on the oil side. It's about $58. Yeah. Now I know they've already mentioned at their recent Capital Markets Day that they let's call it targets by financial year end 2028 is to bring that down to $50. And actually, this massive kick in the oil price has now sort of put a new view on Sasol. And I think this might just be one of those hedges for you know, if things escalate even further geopolitically, they might be one to have a look at. I am a holder.
Yeah. Okay.
So,
All right.
I'm a holder, so definitely something.